Do you recall when we talked about how the Dutch government took over the Chinese-owned chipmaker Nexperia? That one action caused Europe to go into chaos. Overnight, chip deliveries ceased, companies ran out of parts, and the whole car industry was about to shut down. The pressure rose so quickly that Donald Trump even got involved to cool things down. But the Netherlands couldn't keep the line. They gave up and gave China back control of Nexperia because of growing economic and political pressure. This was one of the largest digital retreats Europe has made in years. And before we get started, make sure to subscribe so you don't miss any new breakdowns of the worldwide economic upheaval. Let's get started now. The Dutch government's actions against Nexperia in October were not just for show. Officials put into effect an emergency law from the Cold War that lets the government step in when national security or the stability of important businesses is under danger. Dutch officials took Zhang Shuizhang, the company's China-appointed CEO, out of his job and put Nexperia under direct supervision within a few days. It was one of the most aggressive things any European government has done against a tech business owned by China. The Hague had to act because the list of worries was rising. Investigators said that major problems with governance might stop the flow of important microchips to Europe. Local news outlets said there were suspicions that trade secrets may have already been stolen and that some of Nexperia's production may discreetly move out of Europe altogether. It seemed unimaginable for a continent that was already having trouble getting enough semiconductors to lose control of a major source. Nexperia doesn't make the most advanced AI chips, but it does make billions of parts that are important for cars, machines, and consumer electronics. A break in that chain would have effects on many other fields. The intervention was supposed to make things more stable. Instead, it caused the very crisis that Europe wanted to avoid, and Beijing's reaction came very quickly. Beijing's response was quick and strong. China stopped all chip exports from Nexperia's operations on its territory within hours of the Dutch notification. These places made most of the company's low-margin but necessary parts, which are the pieces that keep European assembly lines running every day. The shock came right away when that flow ceased. What transpired inside the corporation made things even more unstable. People who worked for Nexperia's Chinese division stopped following orders from the European headquarters in Nijmegen. Internal communication broke down, and two sections of the same business started acting separately. Nexperia seemed less like a unified worldwide business, and more like a company being ripped apart by political pressure for the first time. The effects were felt right away all around Europe. Automakers need these essential chips to be delivered on time so they can construct everything from brake systems to controllers for electric vehicles. BMW, Volkswagen and Mercedes-Benz secretly told officials that they were only a few days away from slowing down or even ceasing production at many factories. These chips aren't fancy and they don't cost a lot, but you can't finish a whole car without them. The unexpected stop in supply showed how weak Europe's industrial foundation had become. Factories rushed to find emergency supplies. Some vendors just have a few weeks' worth of parts left. Some people were already limiting how much they could get. Executives who had been talking about diversity and resilience for years were suddenly calling politicians to ask how one action in the Netherlands had driven an entire continent to the brink of an industrial standstill. The longer the export blockade lasted, the more likely it was that real closures would happen. There were warning lights all over Europe, and the political pressure was mounting quickly. The situation needed a breakthrough, but it didn't come from Brussels or The Hague. It came from a place that was far less expected. No one saw the solution coming from where it came from, but it did. The Telegraph said that Donald Trump became directly involved in the disagreement, while Dutch and EU officials were still talking to Beijing. Senior sources who know about the talks said that Washington called Beijing on its own to advocate for an early end to the export freeze that was hurting Europe's car industry. After then, things changed quickly. After weeks of silence, Chinese officials said they were ready to lift the embargo on Nexperia's technology and start sending parts back to Europe. It was evident when it was time. It was only when Washington got involved that China's tone changed. The message was not good for European leaders. Brussels and The Hague had been trying to calm things down, but it didn't happen until the US spoke up. That understanding hit hard in the capitals of Europe. The crisis showed that there was more than just a shaky supply chain. It revealed how little power Europe has in disagreements over China's most important industries. Even when the problem was with a corporation in the EU, the most important diplomatic weight came from outside the continent. The Dutch government didn't have many options left when exports were ready to start again and automakers were putting the most pressure on them. The stalemate was too dangerous and the damage to the economy was too quick. A new plan was being devised in The Hague that would shortly end the intervention and give control of Nexperia back to its Chinese owner. The Dutch government took a choice that brought the whole dispute to an end when chip shipments were about to start up again and Europe's automakers were at their most stressed. Vincent Karamanns, the Dutch Minister of Economic Affairs, stepped up and said that the Netherlands would stop following the Goods Availability Act's emergency order. The unusual government action that had taken away Nexperia's Chinese-appointed CEO and put the company under close government control was reversed overnight. In real life, this meant that Wingtech, Nexperia's Chinese parent company, became back in charge. The Hague termed the move a positive response to what it called a sign of goodwill from Beijing and praised Chinese officials for making sure the chips could be sent to Europe. After weeks of anxiety, the Netherlands now adopted the language of cooperation, stressing how important it was to bring stability back to the global supply chain. At this point, Beijing changed the whole story. A Wingtech spokesperson claimed that the Dutch involvement itself had put Europe's economic security at risk, which was the opposite of what the Dutch government had said at first. He denied all claims of bad management and said that no proof had ever been shown. According to China, the Netherlands had gone too far, messed up a working business, and caused the disaster it said it was trying to avoid. For Dutch officials, the withdrawal was less about sending a message to the public and more about averting greater damage. As the crisis went on, Europe became more and more vulnerable. Automakers were warning of shutdowns, factories were limiting parts, and investors around the world were keeping a close eye on everything. The only way out that made sense was to de-escalate. But when everything was said and done, one painful truth remained. One chip maker had been enough to cause an industrial emergency in Europe, which made many wonder where Europe stood in the global technology competition. The Nexperia problem didn't merely show that one part of Europe's industrial chain was weak. It showed how reliant the whole continent has become on technology that are controlled from beyond its borders. As companies got ready to close and governments rushed to find answers, Europe's own leaders began to declare out loud what had been said in secret for years. Germany's finance minister said that Europe can't lose in the global race against China, especially when it comes to sophisticated manufacturing, electric vehicles, and semiconductors. His message showed that people in European capitals were worried about something bigger. The continent is lagging behind in every important tech area that affects modern power. The EU preached about sovereignty, resilience, and autonomy for years, but events kept proving how weak such goals were. The Nexperia conflict was just the most recent example. Before that, there were shortages of medical supplies, a reliance on Asian battery makers, and a rush of Chinese overcapacity into European markets. Every crisis made Europe act, but not very often did it lead. Brussels now admits that the difference is getting bigger. The US and China are building whole industries around next-generation semiconductors and AI, while Europe is still having trouble getting the parts it needs for its car makers. The warning flags are no longer just ideas. They are happening right now. Europe's efforts to establish its own AI capabilities show the gap between ambition and reality more than anywhere else. It's even evident how hard Europe is trying to develop an independent AI ecosystem. Brussels announced a €1 billion plan to improve artificial intelligence in healthcare, industry, energy, and defense after months of discussion. It was called a big stride toward digital sovereignty on paper. But in reality, the size of the investment showed how far Europe is from the front of the race. At the same time, Nvidia did better than expected, making $57 billion in revenue in the last quarter instead of the $55 billion that analysts had expected. They also forecasted $65 billion for the next quarter. Investors had been worried for weeks that an AI bubble was emerging, so they were eagerly watching this report for signs of a slowdown. But once Nvidia's results came out, the markets calmed down for a short while, which means that demand for AI hardware stayed robust. The business can now see $500 billion in semiconductor sales over the next 15 months, thanks to huge orders from American tech companies. Some of these processors are currently being used in future data center projects that are so big they need their own natural gas or perhaps nuclear power supplies. And in China, the size is just as daunting. State-backed enterprises are putting a lot of money into AI megaprojects worth trillions of yuan. These projects are meant to help Chinese cloud companies and speed up the country's AI goals. In this context, the EU's €1 billion package doesn't seem like a breakthrough. It seems more like a reminder of the expanding divide. And even while the continent is trying to catch up, it is putting off important portions of its own AI Act until 2027 because huge IT companies are against it. Policymakers are worried that stringent laws could slow down innovation just as Europe is striving to pick up speed. All of this brings to light the same painful truth that the Nexperia disaster did. Europe's technical goals are getting bigger, but the resources behind them are still much smaller than the problems that lie ahead. The Nexperia conflict is over, but the message it sent was much wider than just one corporation. A basic chip provider, one that doesn't create cutting-edge processors or AI hardware that gets a lot of attention, was enough to throw Europe's industrial system into chaos. A single export ban from China almost stopped vehicle manufacture all over Europe. And when the Dutch government sought to take over, they had to back down quickly because of pressure from global markets, Beijing, and even Washington. The episode showed how little room for error Europe has now. While the US and China spend hundreds of billions on cutting-edge technologies, Europe is still having trouble keeping access to parts that only cost a few pennies. Its long-promised tech independence is still more of a dream than a reality. The Nexperia crisis put Europe's standing in the new tech order to the test. The results were impossible to ignore, and the concerns they raise are even harder. What will happen to the technology of the future if Europe can't preserve one chip facility today? Do you think the continent can catch up, or has the race already gone too far for it to catch up? Please leave your opinions below, and don't forget to subscribe to obtain updates on changes in the global economy. See you in the next one. See.